Session 45 of Unit 4 of Taxation of 5th semester BBA of Mangalore University. Let us see some additional problems on computation of total income and tax liability. This problem was asked for 20 marks in November 2016. Delta Limited is engaged in the business of manufacture of bicycles. Its profit and loss account is as under. So profit and loss account is given. Net profit is to be considered. Add disallowed items or disallowed expenses. Then deduct incomes which are treated separately. Consider the additional information. And then we need to find out compute total income and tax liability. Apply MAT. So we need to find first business income, then find the total income, and then find the book profit. After that we shall calculate the tax liability. First we shall compute normal tax on total income and minimum alternate tax on book profit. So let us see the computation. Computation of business income. Net profit as per profit and loss account. Add disallowed items, excess depreciation, income tax, customs duty not paid, proposed dividend. Less amount withdrawn from general reserve, amount withdrawn from revaluation reserve. Less unabsorbed loss. So the business income is 2,72,000. Now computation of total income. Business income is already found out. Long-term capital gains. Long-term capital gain from equity shares is exempt. So gross total income is 3,22,000. Here there is deduction under section 80 IB. 2,72,000 at the rate of 30% comes to 81,600. So from the gross total income deduction under section 80 IB, we get the total income. And total income is 2,40,400. Computation of book profit for minimum alternate tax. So first we take the net profit, add depreciation. Here depreciation is excess depreciation, we need to actually add. Then income tax, proposed dividend, long-term capital gain exempt under section 10 subsection 38. Less amount withdrawn from general reserve. Carried forward loss or unabsorbed depreciation, whichever is less. Then amount from RR to the extent it does not exceed extra depreciation because of revaluation. So we get the book profit. Now tax on long-term capital gain at the rate of 20% and tax on balance. From the total income you deduct long-term capital gain, you get the other income 1,90,400 at the rate of 25% comes to 47,600. So the total tax is 57,600. On that 4% health and education cess. So the tax liability, normal tax liability is 59,904. Now minimum alternate tax, tax on book profit at the rate of 15%. Then on 2,41,350, health and education cess at the rate of 4%. So the minimum alternate tax is 2,51,004 rupees. Now the normal tax as well as minimum alternate tax, whichever is greater. Minimum alternate tax is higher, therefore 2,51,000. It is rounded off to minimum the nearest 10 rupees. So 2,51,000 is the tax liability, and the assessee can claim MAT credit, that is the difference between the tax paid 2,51,000 and the normal tax. This amount will be given as MAT credit. These are the references.